Hey, how's it going, everybody? Mike Weber here, your Los Angeles and South Bay real estate broker, here with your real estate market update for the beginning of March 2018. Boy, oh boy, has the last couple weeks been a roller coaster ride for markets around the world and in the US. With the coronavirus picking up steam around the world and now in the United States, it has really led to all kinds of volatility and crazy stuff taking place. Of course, just yesterday, the Federal Reserve, in an emergency meeting, took an unprecedented step and lowered rates another 50 basis points or 0.5%. And the stock market immediately reacted very negatively to that news, which was quite surprising. And then, of course, today is up vastly. So lots of volatility in the markets. And certainly, we are just seeing the very tip of the iceberg in terms of what's likely going to happen over the next several months as we see how coronavirus unfolds in the United States. So let's jump in, take a look at the information, what's happening at least for February. We'll look at Los Angeles County as a whole. And if we look at median prices, we are up 5.8% year over year. Now, really what's happening out there is that as interest rates have started to drop kind of from the beginning of last year throughout last year, we essentially saw basically any inventory that was getting listed on the market being taken off the market by buyers very quickly. There was a lot of stimulation there, helping a lot of people to be able to get homes that otherwise wouldn't have been able to or that they couldn't afford even the year before as rates started trending upwards. And so basically that demand, because of the low rates, has caused there to just be less inventory and essentially prices to continue to rise if you're looking at the median prices for Los Angeles County. Now, if we take a look at closed sales in Los Angeles County, the trend continues in that regard. And what we see is that we are up 9.2% year over year. So strong closed sales. And again, that's largely fueled by the ability of people to continue borrowing, new loan types, higher loan limits, and of course, lower interest rates across the board. So if we move down here, we look at month supply. This is where things do look a little bit different. And what we see is that we are down 28.1% year over year in terms of supply of inventory. And the reason for that is, as we discussed, is that as rates started trending up in 2018, the amount of inventory on the market started rising, the number of sales started falling. And then, of course, towards the end of 2018, the Fed changed their strategy, changed their stance, started lowering the federal funds rate. And as the federal funds rate started to fall, the amount of inventory in the market just continued to drop all throughout 2019. And then here we are back at these extreme low levels, making it extremely competitive out there for buyers looking for a property. And so it's going to be very interesting to see what happens over the next several months as the coronavirus continues to pick up steam in the US and we see dramatic health and economic consequences of this virus spreading. So, the question is whether or not sellers are going to sit out, hunker down and keep their homes off the market. We're going to see this dramatic low inventory. And for that reason, prices are just going to rise like crazy because of the people that really do need to buy a home quickly. Or, are we going to see buyer demand drop off and, just very limited activity whatsoever, like we're currently seeing in parts of China, where essentially the real estate market has just went to zero. Nobody's buying, nobody's looking, nothing's being transacted. So we're going to have to follow that closely. We're also in an election year, and so that just adds on top of all of this a lot of other factors that probably will affect what happens in the housing market going forward as well. Now, if we take a look at what's going on in the South Bay, little bit different picture than Los Angeles County as a whole. Median prices are down 1.6 year over year. Now, of course, we're just looking at a monthly number from a year over year standpoint. So there is going to be some variation, some flexibility. Obviously, the South Bay sits within Los Angeles County, and Los Angeles County is up. But even so, it is interesting to see there is a slight drop off for the end of February in terms of median prices in the South Bay. Now, I've looked into a bunch of individual cities in the South Bay, and many of them are seeing price declines, and that's probably largely responsible for why we are down 1.6% compared to February a year ago. Now, if we look at closed sales, we are up 15%. So again, a lot of activity out there in terms of what's actually making it to the closing table. However, that being said, just like Los Angeles County as a whole, there's essentially no inventory on the market. So instead of buyers having choices, whatever gets listed on the market has, people going after it immediately. Stuff's going into escrow in the first 3, 4, 5 days, and usually with multiple offers. So the supply of inventory in the South Bay is down 26.9% year over year. So a pretty extreme drop off there. So again, I'll be covering the market very closely over the next several months. Do me a favor, let me know what's happening in your area. Let me know what you think is going to happen as a result of the coronavirus, the elections, all these things that are going on. Go ahead and click the like button, click the subscribe button. I definitely appreciate it. And of course, if I can help you with anything related to real estate anywhere in Los Angeles County, give me a call. I'm here to help. Thanks so much for watching, and I will see you on the next one.